Hello, let's study Home Solutions of America, ticker symbol HSOA. And okay, we'll start by technical analysis. This is a long-term chart. You can see the stock was at, probably there were splits here. I don't think this was a genuine fall, so this chart probably isn't right here. Let's check a more recent chart, the medium-term chart. Well, we had this awesome bull run here from about less than $2 to more than 14, then a very sharp pullback and a gap down here, recently another gap up, which means this is what we call a reversal island, because these 2 month and a half prices were left alone in the chart here. This is an island, which is a bullish reversal formation, so this chart is very bullish now. As for the fundamentals, I know there were great news out just now, and I'm very sorry because I was to recommend this stock before the open, but didn't do it, so it doesn't count. And the stock, let me see, it is halted now. Just a second, my computer is a bit slow today. I wish it were just a computer. So, man. Okay, this thing isn't working. Let's move on with the fundamental analysis. Okay, here we have the share count and the market cap. Well, the company, well, let's see it now. Okay, it is still halted at 6.25, up 4% on the session due to that big news. Okay, here we have the share count. The company diluted shareholders value a lot here in 2005 and 06. That's why it declined so much thereafter. And the share count compound annual growth rate since 1999 is 27.5%, and the market cap has been growing 59%. So we need to consider a very high dilution factor for HSOA, but still the stock is very attractive, as we'll see. The balance sheet is somewhat weak, with 34 million in long-term debt and a current ratio of 1.91, and cash and marketable securities accounts for just 6% of total current assets and 68% of receivables. So maybe this explains why the dilution. As for revenues and gross margin, well, revenues have been growing extremely fast. You can see here they were just 2.56 million in 2002, 14 million in 03, 31 million in 04, 68 million in 05, 127 million in 06, and 210 million in 07, and 263 million in 08. But the news just released says it is an order for 100 million, mostly between 2008 and 2009. So probably analysts are going to revise up these estimates for 08. Revenue compound annual growth rate since 2003 has been 97%, and the industry growth rate from a year ago levels is just 17.7%. Gross margin for our company is 49%, and the industry average is 40%. And the price to sales ratio, considering 2007 revenue estimates, but they'll probably be more than this, is 1.32 and 1.98 for the industry average. They said, the company said, this will add $12 million to 2007 revenues. Today's news, so probably I would have to push this number up. But still, Home Solutions of America looks cheap. On an earnings per share and net profit margin basis, earnings have been growing steadily since 2004, when they were 10 cents per share, and then to 30 cents in 2005, 39 cents in 06, and expected for 07, 61 cents, and for 08, 79 cents. But this news, this very big news, will also contribute to earnings, no doubt about it. So earnings will be more than this. Net profit margin in the first quarter of 07 was 14.3%, I expect 15% going forward.
Database has been updated.
Sorry for this. The price to earnings ratio, considering 2007 earnings per share estimates, is 9.77 and the industry average is almost 23. So again, our company looks cheap here. My valuation model, look here, I consider a 20% dilution factor going forward, which is very high. Revenue CAGR of 50%, but it will probably more with the news we just got. Final net profit margin of 15%, it was 14.3% in the first quarter, and an earnings per share multiple estimate similar to the industry average of 22.93. And all this gives me an expected share price compound annual growth rate for the next 3 years of 44.6%, which I consider very attractive. Anything above 16% is I welcome. And the optimal selling price, considering all this, is 11.58, which is the point where the share price CAGR goes from more than 16% to less than 16%. So I consider the stock very attractive here. And on a 1 to 10 scale, I give it a 9. I know the company has this very bad habit of diluting shareholders' value, but I've taken that into account, and still the stock is very cheap. So, well, let me see if it was released for trading now. Just a second. Yes, it is opening at 6.25. I would buy it here, but I never make intraday decisions and fail to make the recommendation earlier, so well, I'm sorry. Better luck next time.